Good morning, everyone. It's 10 a.m. on Tuesday, May 19th, 2020, and this is 10 on Tuesdays. Today, we're hitting three important sales tax updates. We have a new contractor exemption that's effective in just a few days, June 1st. We will be diving into that. And do you know anyone who operates video gambling machines? We're going to talk about why they need to be extra prepared for audit and enforcement activities. And finally, what are businesses currently under audit going through during COVID? I'm going to give an update on that. I am Holly Hoffman, founding partner and CEO of the Sales and Income Tax Advisory Network. Prior to creating my company last fall, I worked for the Wisconsin Department of Revenue as an auditor, speaker, and sales tax specialist. My passion is to help provide sales tax education and support to tax professionals, businesses, and associations to build a network of empowered taxpayers. For more information, visit salesandIncomeTax.com. Thank you for joining my web chats, 10 on Tuesdays, every Tuesday from 10 to 10:30 a.m. We just completed a topic series on audits, and you can check out previous episodes on my 10 on Tuesdays channel. To find my channel, I've made it even more simple. Go to salesandIncomeTax.com, look for the 10 on Tuesdays icon towards the top of the page, and click on Watch Previous Episodes just below that icon. So today we're talking about three things, like I said: the new contractor exemption, the temporary storage exemption, increased enforcement efforts on video gambling machines in Wisconsin, and an update on audits since COVID. Our first topic is about the temporary storage exemption. This mainly applies to contractors, but as we discuss this, you'll understand that it may apply to fabricators, manufacturers, printers, processors. It may apply to more people than you think as to the effect of the exemption. This exemption provides Wisconsin contractors use tax relief and allows their bids to be more competitive for certain real property construction in other states. So it allows them to purchase materials in Wisconsin, maybe need to store them. As long as they are stored for 120 days or less, they can even convert, fabricate, manufacture, print, process, or shape those products before they're shipped out of state to that real property construction site. And this provides an exemption for those materials. So the effective date on this exemption is June 1st, 2020. And I just want to clarify that effective date. It's not, the law does not say contract date for contracts entered into June 1st. It just says June 1st, 2020. So any materials as of June 1st that are used according to the criteria of this exemption qualify for the exemption. And let's talk about what the criteria are for this exemption. So like I mentioned, it has to be a purchase of tangible personal property. Those materials need to be stored in Wisconsin for 120 days or less. So a temporary storage situation. They must be used in real property construction activities solely outside of Wisconsin at a nonprofit organization, those are 501c3s, public school district, or a business district where business tax incentives have been granted. And the property is used by a person engaged in an activity classified as construction under Sector 23 of the NAICS 2017 edition. And if you're wondering what that is, just to clarify, in the NAICS definition under Sector 23 for construction, it's primarily, a person would be primarily engaged in the construction of buildings or engineering projects such as highways or utility systems, and it includes specialty trade contractors such as masons, plumbers, electricians. Construction work done may include new work, additions, alterations, or maintenance and repairs. This construction sector is pretty broad. It can be construction of buildings, it can be heavy and civil engineering construction, or it can be more specific, the specialty trade contractors. And you don't have to be classified, your NAICS classification doesn't have to be Sector 23 as a construction contractor. You just need to be a person engaged in activity classified as construction. All right. And also this exemption states that it includes property that is altered by converting, fabricating, manufacturing, printing, processing, or shaping before its use outside of Wisconsin. Because prior, if you had purchased materials in Wisconsin and done something to them, converted them, printed them, fabricated them, we would consider that a use in Wisconsin, and you would owe use tax for that. It wouldn't just be storage, it'd be use. But this is saying materials stored, and these types of uses are still acceptable if they're converted, fabricated, manufactured, printed, processed, or shaped before its use outside of Wisconsin. So that's kind of nice. That really opens it up for contractors. So the person who's engaged in these real property construction activities, who store materials, are able to qualify in their tangible personal property stored here temporarily as exempt. It may be purchase of raw materials. They may be purchasing fabricated materials or manufactured materials from a manufacturer, such as trusses, framed out walls, floors, timber frames. Could be a variety of things. And I just want to run through a few different scenarios of this exemption, of how it might play out. So first scenario, you purchase materials in Wisconsin or maybe from an out-of-state vendor and receive them, those materials, store them in Wisconsin, again, 120 days or less, and then use an out-of-state and real property, meeting the exemptions of the criteria. If you purchase those materials and use them in the fashion required, you would provide your vendor, with an S211, that's the Wisconsin Exemption Certificate, or the S211E, that's the Wisconsin Electronic Exemption Certificate. And you're going to claim other purchases exempted by law, because this exemption is not listed on those forms at this time. And you would write in, at the top of the slide here, I have the section, the statute number. It's section 77.54, parentheses 69, Wisconsin statutes. So another example, that's just the easy, simple example. You purchase materials exempt, say it's sheet metal. So you purchase some sheet metal that you're going to use out of state in a real property construction activity for a nonprofit. And then you hire a subcontractor to fabricate the sheet metal according to your specifications. The subcontractor is providing a service to that tangible personal property, that sheet metal. And generally, the service to tangible personal property is taxable, right? We talked about this before. However, since the service is to property that qualifies for an exemption, it's exempt because you were able to purchase that sheet metal without tax because you're temporarily storing it and then using it out of state. Since that property is exempt, the service is also exempt, because remember, services follow the item being serviced. If the item's tangible personal property, it's generally taxable unless an exemption applies. Or if you're servicing real property, then it's not taxable, right? Because the real property is not taxable. So in this case, the fabricator, maybe another service provider, maybe a printer printing something. There's a lot of options that could happen. Someone's processing something, coding something. That service provider is providing a service to exempt property, so that would also be exempt. But you need to provide the service provider, the subcontractor, an exemption certificate so that they can document why they didn't charge tax. So you're going to provide that same type of exemption certificate, the S211 or S211E, claiming other purchases exempted by law, and then writing in section 77, 54, 69 Wisconsin statutes. So another example, so that was you purchase materials and then take them somewhere to get them fabricated. Another example is you may purchase fabricated, processed, printed, or manufactured parts that were created to your specifications. It doesn't have to be to your specifications, but whatever, you purchase these materials that are prefabricated, processed, printed. An example may be an awning printed with the street number for a building you're working on out of state. You would provide the awning or sign company with an exemption certificate claiming the temporary storage exemption. Then they would not charge you tax. Another example, maybe you purchase materials from an out-of-state vendor to manufacture or process or fabricate at your location here in Wisconsin. So an example like that is big custom timber framing contractors do this. They purchase the timber out of state, it's shipped to Wisconsin, they frame it up, and then the items are shipped to the job location out of state and assembled. And there may be a lot of other that I can't think of off the top of my head, but that's a good example. So you're purchasing materials, the exemption qualifies, and then you manufacture, process, fabricate, do something to those materials. And remember, prior to this new exemption, DOR would say you use those materials, you use them in Wisconsin, so you owe use tax on them. This exemption here says, no, that qualifies for exemption as long as those materials were in Wisconsin, stored by you, used by you, 120 days or less. So now how do you document these purchases to substantiate them being exempt? So I always say, first and foremost, put as much information on your invoice as possible. You want to maintain a contract, keep that on file, and these will identify the date, job location, end customer information, business district information, and a description of the job, of the job. All items that fit in the criteria items of this exemption. Of course, you want to maintain your purchase invoices of the materials that you purchased exempt. And then if your end customer is an exempt entity, then you want a nonprofit, 501c3. If you can get a copy of their federal determination letter, that would be great. Again, this is not the same as the building materials exemption, but similar. Your customer may be a general contractor, not the nonprofit, but the work is for the nonprofit. So maybe you need to get information about the end customer or the business district info from your general contractor at that job location. But you want to document as much as you can of the criteria so that you are covered during audit. And I would keep that with the invoice. Beware, so Wisconsin's now exempting this, but beware of sales and use tax laws in the state where you're installing, doing that real property construction activity, because that state may require you to pay sales or use tax on the materials installed. So just be careful that you're aware of those rules where you're installing. If you have questions on this exemption, reach out to me. A lot of things don't come up until you get in the situation that's specific to you, and then you're not sure. So just reach out. Before I get into my next topic, I want to emphasize that it's important to keep an eye on what Wisconsin Department of Revenue is telling you and informing you and keeping you updated on. I mean, I think I've mentioned it several times before, but this is a little excerpt from the Wisconsin Tax Bulletin that DOR puts out. It's issued quarterly. Sometimes there's extra issues throughout the year due to a lot of new tax laws or information that has to get out right away, but generally not more than 5 issues per year. It goes in a general order. It starts with new tax laws, then general reminders, and then sales and use tax updates and reminders. And then at the end is reports on litigation for all tax types. But this does cover all tax types. It covers a little bit, it'll touch on excise, income, withholding, and sales and use tax. Items printed in here are either new tax laws that you definitely need to be aware of. If something's changing in your industry that applies to your business, you want to know to do it correctly and when you need to start doing that change. If there's reminders, it's because, again, DOR has identified an issue or it's an initiative or a policy that they're making a point to enforce, that they're giving you warning, this is what you should be doing, and just note that we will be out there looking for this issue. So it's a heads up for you to correct your reporting before they find you and audit you. And then the sales and use tax updates and reminders, the articles, that's down below the third item. That is things that they're running across, either people asking questions of customer service, a lot of questions on a topic, or they're seeing a lot of issues in audit with this where taxpayers aren't doing it correctly or have questions about it, or it's a confusing issue. And so they'll write an article about it also to help educate you and let you know the correct way to do it. But then the expectation will be, we educated you, so therefore, when we find it, there's really no excuse to not be doing it correctly. So very important to keep an eye out for these. I put the information for the link where you can get notices from DOR when they send out the tax bulletins. But just know a lot of my information and cues come from here as well. So one of those cues is in the April 2020 edition. And I've been warning about this at my presentations, is that they're striking a different tone with video gambling machine enforcement. So let me step back a minute. So everyone knows that video gambling machines are technically illegal, but if you have 5 or fewer machines at a Class B premises at a bar, that it's generally not going to be enforced. They're not going to be removed. How this all came about is when gambling activities at Native American tribal reservations was negotiated and agreed to, the tribes were promised that they would be having exclusive rights to gambling. And so this law was put into effect that gambling machines, video gambling machines, were illegal. However, the previous administrations determined that they were not going to enforce this law unless there was more than 5 gaming machines on site, or if it was a non-Class B premises, like gas stations, laundromats. The new administration, the Evers administration, is striking a different tone because they're looking at renegotiating the gambling agreement with the tribes, and they want to show an effort of good faith that they're enforcing the exclusivity of gambling for tribes. And so they're cracking down on video gambling machines. And this is the notice to everyone in Wisconsin that you need to be following the rules if you're not following the rules, they are coming to the point that they're willing to seize machines. But until they decide to seize machines, or maybe they won't seize machines, but they're going to be very strict about enforcing the tax reporting requirements. So included in this article are two things. The department's auditors and alcohol and tobacco enforcement agents are working together to ensure compliance with Wisconsin laws as they apply to video gambling machines. So they tell you right out, they're making an effort to enforce the laws as they apply to video gambling machines. And they lay out the laws that presence of 5 or fewer video gambling machines on a Class B premises is a violation subject to civil forfeiture. They also state in the article, district attorneys may prosecute all gambling violations, even though local law enforcement may not investigate the violations occurring on Class B premises. So don't think that you have certain protections by local law enforcement not enforcing the law. The article also goes into detail about reporting requirements for sales and income tax, and warns that if proper records are not maintained, that they're going to do an income reconstruction and disallow income tax deductions for lack of substantiation. And they have multiple ways to effectively reconstruct income, and it's never going to be on the low end. It's not going to be a conservative guess. If an operator files an incorrect income or franchise tax or sales and use tax return due to negligence or fraud, penalties and interest will be assessed, and the operator seller's permit may be revoked. And they talk about the interest rate on delinquent taxes being 18% and civil penalties. That's if they determine that you committed fraud, that you intentionally didn't report income from machines or sales tax from the machines. Civil penalties can be as much as 100% of the amount of tax not reported on the return. So you'll owe double the tax and then 18%, possibly other penalties on top of that. It adds up to a lot of money. And criminal penalties. They're warning about criminal penalties for failing to file or filing a false return, include a fine up to $10,000 imprisonment. I'm not saying they're going to put people in jail for this. I'm just saying they're definitely going to crack down, and they gave a very clear warning to all Wisconsin businesses that you better be maintaining your files, you better be reporting accurately. So what I'm advising is prepare for audit now. I know video gambling machines are a way to make up money. They're a good source of income and revenue. But lack of record keeping at this point will not be an acceptable excuse. And you may be accused of intentionally underreporting. So if you're the machine operator, make sure you keep printed reports by machine on a regular basis, daily, weekly. Keep those printed reports and be reporting accurately to match those printed reports. Track payouts, date, name, and contact information, and dollar amount of the payout. And machine operators, make sure you're reporting and remitting accurate sales and income tax, because this will be the easiest way for them, the DOR, to enforce the law is by coming out and auditing. If you're not complying with reporting the sales tax or the income tax, there's really no reason for DOR to allow you to keep your machines. It's just giving them an excuse to seize them. Again, I'm not saying they're going to seize all of them. If you're doing some, have some minor errors, they're not going to seize them. But I think they're going to be very stiff in applying penalties. And I'm warning you that there's a reason for it. So I just want you to be prepared. Check out the tax bulletin article. I gave a link to it here, the top one under resources. It goes through all the requirements and whether or not you're a machine operator. And just be careful because some of the agreements with amusement device companies who lease the machines to you, look at the agreement. Some, remain the operators and they split the commission with you. Well, then you're not subject to sales tax, just income tax. Some say they're operating 3 of the 5 machines and you're operating the other 2 machines. So you're responsible for income tax on all, but sales and income tax on 2 of them. So you want to make sure that you have your machines identified, 1, 2, 3, 4, 5. Make sure you're keeping printed reports. Make sure you're reporting accurately by which machines you operate. I also have an article from March because I was talking about this earlier in the year. So I have an article, Amusement Devices, Tax Treatment of Related Purchases and Sales, talking about gaming machines. So just be careful, be watching that. I just have a short audit update, how audits are being conducted during the shutdown, and now things are opening up again. But state offices, I tried to find last night if any were open or when DOR was going to open. I don't see any dates yet. Audit notices are continuing to go out because they feel they can start audits and do some of the work remotely. Auditors are working from their homes. Auditors are saying they're being more lenient on timelines for receiving records because it's more difficult providing everything electronically. But they acknowledge that not everything can be provided electronically, so purchase record review is still going to be required to be on site. And since the state offices are closed and auditors are not allowed to do in-person meetings, those on-site record reviews are delayed, and they'll start scheduling those once auditors are allowed to go back to regular business. So audits are going to start. They'll do them up to the point where they look at the purchase invoices, and then they'll have to wait to schedule a date to do purchase invoice review or any records that you can't provide electronically. They'll review in the field. And when that's going to be completed or when they can schedule those reviews, we don't know yet. If you have any questions or concerns or have an audit going on and you want some advice, please contact me. Just go to salesandincometx.com and get a free consultation. There's a button right at the top of the page to schedule a free consultation with me. Next week, 10 on Tuesdays. I know you're tired of listening to me, so we're bringing in guests. Next week's guest is Daryl Rowinski. He's a credit and collections management expert. He's from the Wisconsin Business Credit Management Association. He has super good information, and I really encourage people to register and attend next week's session. June 9th, the week after, we're going to be talking about manufacturing, and John Wendorf, CPA and partner from MBE CPAs, will be my guest, and we're going to be talking about some of the impacts and results on manufacturers from COVID and the shutdown. So that's it for today. I want to thank everyone for joining me. I'm working hard to schedule more guests for future episodes, so connect with Sales and Income Tax Advisory Network on social media to learn about upcoming guests. Again, if you have any questions, you know how to contact me, salesandincometx.com on my website. So until next week, I will see you guys later. Enjoy the beautiful weather, and hopefully the storms aren't too bad. Have a good one.